Today, it's draft day. What more can I say, folks? This is where the money is. Howdy, folks. I'm Matt Koppenheffer. Today, I am joined with some special guests here. We've got Brendan Matthews from Motley Fool Stock Advisor.
Hey, Matt.
I've got Billy Kipersztok from Motley Fool Options and Motley Fool Pro.
Correct.
And of course, David Young Guns Hanson,
back again,
who is typically here with me, except when he's playing golf.
Yep.
Today's a big day. We're having the Motley Fool Financials stock draft. The way this is going to work is we're going to go around the table. Everybody's going to get 1 minute to pick a stock. It's got to be within the financial sector. And the only ground rules are that everybody has to pick at least one bank, one insurance company, one REIT, and then one other. And other can be a consumer finance company, not a consumer goods company, a consumer finance company, or an investment bank, something along those lines. And without any further introduction, David, let's get the first minute on the clock here.
Round one.
Round one. Billy, you're on the clock.
All right, so for pick number one, I think I'm going to go with a pretty obvious choice here. I'm going to go with Berkshire Hathaway.
Oh, taking Berkshire off the table
board
early.
Yep. So obviously Berkshire Hathaway, collection of great businesses, led by maven Warren Buffett. It's a pretty easy choice, stable company. I think they'll have no problem beating the S&P 500.
Alrighty. Next up.
All right, number two.
Who is next on the list here? We've got
the order is Billy, then myself, then Matt, and then Brendan. So, and we're not doing a snake style. It's whoever goes first, they don't get another pick.
All right, enough jibber jabber. David, you're on the clock. Stop stalling.
All right, my first pick. This may not be a surprise to Matt or to regular viewers. I'm going to go with one of the big banks. I don't think there's a lot of huge value out there.
Don't do it.
With some of the regional banks, I think some of the bigger banks offer better value to investors today. I'm going to go with JP Morgan Chase, hated by many, beloved by myself, and I think Matt as well, who may be disappointed there. I look at this bank, again, very attractive valuation considering the returns that this bank is generating. Last year, I think over $20 billion in net income, despite the London whale trading incident that everyone knows and does not love. Great franchise here, great asset management business, great consumer business, great investment bank, great trading. Across the board, industry leaders in all these businesses. That's why they're my number one pick in the first round here.
All right. All right, David, you took one of my top choices, so I'm going to take one that I know is probably also on among other people's top choices. I'm going AIG. AIG, I think we can still call it the disgraced insurer. I think we can still intro it that way. The financial crisis was not kind to AIG, largely because of their financial products division. They had gotten way out too far in terms of, they called it insuring different types of financial instruments, but when you're doing that kind of thing, it's questionable how much that's really an insurance operation. But now they really are focusing back in on their core insurance. I think it's still a solid insurer, and I think it is going to crush the market over the next 5 to 10 years. AIG is my pick. Brendan?
Pick, probably. Well, I guess it makes it easier for me. I don't have to think about picking that. I'm going to go with another big bank. This is the bank with the lowest cost of deposits, or one of the lowest cost of deposits of any bank in the country. And it's had some struggles, but it still trades at a 30% discount to book. So I'm talking about Bank of America, of course. It's been on a run recently, but I still think it offers a great value, and I think it's going to be a market beater over the next 5 years.
Number one thing you're worried about Bank of America over the next couple of years?
I think the biggest risk is regulatory, and if they're forced to raise more capital and shareholders get diluted, that could be a problem. But I think you're paid to take that risk.
Let's briefly recap here. First round drafting, we've got Berkshire Hathaway going the first overall pick to Billy here. Strong pick. David took down JP Morgan. I went with AIG, and Brendan finished off the round with BAC, Bank of America. Let's head to the second round, folks.
Great. Billy?
All right. Let's see what I got here. Okay, I'm going to go with an REIT this time, actually. One of my favorite companies, American Tower. American Tower is a great business. Basically, they benefit from a lot of operating leverage, and that additional revenue goes down to the bottom line. What they do is they're a tower operator, and they lease towers to wireless carriers. And they make a lot of money doing that, and they're expanding overseas. They're going international. They're probably the most international of all the tower operators, and they have a great economic model. They're pretty cheap right now, selling at probably the lower end of their valuation range over the last probably 5 years. So I think it's a great pick.
Alrighty.
Alrighty, we got a minute,
David.
right? I get a whole minute
You
to
get a
pick
full
here.
minute.
Okay, so I got the bank out of the way. Got the insurance up next, perhaps.
Bank out of the way. I feel like banks are one of the easiest pools to pick from.
I'm gonna go ahead and break some hearts early. I know it might break Brendan's heart. I'm gonna go with insurance. I'm gonna go with Markel.
I knew it was coming there.
So after we make all these picks, so we're gonna aggregate these into a caps account, so anyone can follow along, see how these picks are doing versus the S&P. Over the next couple months or so, I don't expect Markel to go up 40%. That's not what I'm anticipating here. So over the short term, I don't see this as a huge short-term winner. But again, we're long-term investors here. I think Markel is a stock that's positioned to win over the next 5, 10 years. So I'm not expecting huge gains in the short run, but this is a great insurance company and also great capital allocators behind that insurance company that can really compound this book value over time. So I'm going to go with a little bit of an off the beaten path pick here with my second one. Going to tackle the insurance, taking Markel.
All right. So we've got 3 insurers off my list so far. We've got one of the banks off my list so far. Oh man, this is so where do I go next here? There are a couple more insurers that I really like. There's actually a few more insurers that are still on my list that I really like, and I have a feeling I'll have some more time to get them later in the draft. The REIT sector, I'm a little bit light on, so I'm tempted to go with one of those because I have a feeling David could end up stealing one of mine if he's not already looking at my screen. But I think I'll go banks right now, and I'll take one that I know might disappoint David a little bit. I'm gonna go with Capital One, ticker symbol COF. I think everybody knows Capital One as the credit card company, big giant credit card issuer. But it's been expanding outside of that. It's been it bought the U.S. business of ING, the ING Direct business, which at first, as a customer of ING Direct, kind of broke my heart because I really liked it. But my wife and I have stuck with it, and Capital One has actually done a good job with that. So I think they're going to end up holding on to a lot more of the deposit base and a lot more of the customers than people expected. And it looks like I'm already running over time. I think Capital One's going to be a winner. I'll leave it at that.
So for my pick, I love internet banking. I love that area. I think Capital One is interesting because of that ING Direct. They call it Capital One 360. That it's the biggest internet bank. I'm going to pick Boffy. It's Bank of the Internet. It is the largest sort of pure play internet bank. And what I love about it is it has such an incredible opportunity to grow its deposits. I could see it growing deposits, which is really a key indicator for the intrinsic value of a bank is how much does it have in deposits. And I could see it growing deposits at 25, 30% a year for 5 years. And I would see the stock, even though it's a little expensive now, growing along with those deposits.
Cool. So it's that's a bold pick. It is expensive, but I mean, you're right. If those growth rates keep up, it can more than outperform the market. All right, recap of the second round. We've got Billy with American Tower AMT, David taking Markel MKL. I went with Capital One Financial COF, and Brendan finishing off the round on a strong note with BofI Holdings. That ticker symbol is BOFI. Let's head on to the third round.
Let's do it. All right, so Brendan, you took one of my most promising picks here, but that's okay.
I knew one of you two was going to take that one early.
That's okay, because I'm going to go with another bank, probably one of the most stable, conservatively operated banks in the sector, and also one that kind of plays off my first pick, which is Berkshire Hathaway, which is Wells Fargo, is who I'm going to go with. They are owned by they are partially owned by Warren Buffett. He has a significant investment in Wells Fargo. That's always a good vote of confidence there. They have top-notch management, consistent culture, good sales culture. They do a good job of cross-selling products. It's a strong bank, conservatively operated, good diversification. I think it's just going to be a pretty stable pick for me.
Also, so when I was saying Bank of America has low-cost deposits, Wells Fargo also very low-cost deposit base.
Yep, very true. Good return on equity, a little more pricey, 1.5 times book, but still a good bank.
That's a solid price for Wells Fargo.
All right, my third round pick. People see Wells Fargo. They think people like Wells Fargo. Not too many people get riled up with Wells Fargo and think it's an evil corporation. I'm going to go on the other side of the spectrum and pick one of those evil corporations in the eyes of many. Going to go with my other slot here. Going to fill in Goldman Sachs. Obviously a company that doesn't have the best reputation amongst Main Street, but with their corporate clients, with those big institutional investor clients, they're top-notch. And despite everything that happened in the financial crisis, they're still the gold standard in investment banking, in fixed income trading. And when I look at the valuation, it's well below where it has been historically. There is some reason for that valuation to be lower. There is regulation that could potentially cap some of their activities in the long run. But I think Goldman's smart enough to maneuver around these regulations, continue to find value for their clients, continue to find value for their shareholders. So I'm picking up Goldman Sachs right here.
Does headline risk concern you with Goldman Sachs?
I think headline risk turns into potentially headline opportunity. I'm not concerned. I'm not concerned with the vampire squid
turning
headline.
it back around on me.
It doesn't scare me. Like I said, this is they come out and say this perhaps more than any other investment bank. They are a customer, client-driven business. That's what I care about. I care about what their clients think, not necessarily what Main Street thinks.
All right.
Strong.
Goldman Sachs off the board. It's a strong third round pick. All right. I'm going to go ahead and do my REIT spot right now. There are a lot of the REITs actually right now, the equity REITs, that don't look terribly compelling to me. I think a lot of them have been bid up as people chase down yield. This could be a little bit dicey because it's going to be a tough environment for these guys to navigate. But Two Harbors, I think, is one of the better managed mortgage REITs. What's kind of unfortunate about that is that it's not that much of a secret that they are better managed and have had a stronger portfolio than some of the other mortgage REITs. It's not selling as much of a discount as the others. I think we're looking at about 5 or 7% discount to book value, but it's a discount to book value. I think it's well run. I have a feeling that they will outperform the rest of the mortgage REITs and the market as a whole. Two Harbors off the board.
Alrighty.
So I started out with Bank of America, sort of a deep value pick. Went to BOFI, Bank of the Internet, more of a growth pick. I'm going to go with another growth pick, but outside of banking. Wisdom Tree Investments, symbol WETF. It's basically an investment business. What they do is they sponsor ETFs. The twist is they're fundamental ETFs, so they're created based on dividends, sales, profits, rather than just market size. Those type of ETFs tend to outperform the market, and we're seeing tremendous inflows into their business. You could see 30, 40, 50% a year in AUM growth. And again, that's what's going to drive the intrinsic value of the business. I see this being a long-term winner for a long time.
I think that's probably the first pick that's really caught me by surprise. I love that you're getting out and getting deep in the draft there. So third round recap here. Billy going with Wells Fargo, ticker symbol WFC. David, the vampire squid, Goldman Sachs GS. I went with Mortgage REIT Two Harbors, TWO. And finally we had Brendan with the dark horse Wisdom Tree.
I got the last pick here. I got to get creative.
WETF. I love it. Heading on to the fourth round. Billy, back on the clock.
All right. Let's see. So I think I'm going to go here with a little bit of a different pick. And only part of this business is actually related to the financial services industry, but I'm going to go with eBay. And the part of the business that I'm interested in and talking about is PayPal, which accounts for about 40% of their overall sales. PayPal is growing like gangbusters.
It's 40% of overall?
Of their overall revenue, I believe so.
Okay.
Yeah. and growing. So I think it was less than that significantly in the past 5 years, and it's grown to that point today. I expect it to continue to contribute more to eBay over time. What more can I say about PayPal? I think electronic transactions are poised to grow. I think that's a huge tailwind, throughout the world, basically. And I think eBay is poised to capture a lot of that market. So that's my pick.
Solid pick. David Hanson.
All right, going with, back on the banking side here, going with PNC Financial Services. So PNC, founded as a northeastern regional bank, has slowly crept its way down to the southeast through its acquisition of RBC's U.S. retail operations. So they now are spanning all across the East Coast there. I really like what the management team is doing here. When the financial crisis hit, a lot of banks were obviously in a tough position. They couldn't go out and make acquisitions when banks were cheap. PNC, on the other hand, had a good financial position. They were able to take advantage of some market weakness, really expand their footprint. And they have a great model, great consumer business, great business banking business there to be able to cross-sell across all these lines. I see it a little bit like a regional, smaller Wells Fargo. That's kind of my ideal vision for PNC one day. I think the valuation's very reasonable today. PNC trading at just above book value, I believe. So for a high-quality bank with high-quality business, I think that's a fair price. I'm going to take PNC.
That's another one off of my banking top picks. Thank you, David. All
Poaching.
right. Poaching indeed. I am thinking now it's time to look to that other sector. Maybe fill that spot early before too many of those start to disappear here. And the one that I have at the top of my list here that I think I'm going to go with is Discover Financial, DFS. And it's kind of an interesting position that they're in here. In terms of the branded cards, you've got American Express, Visa, and MasterCard. I feel like all with a little bit of maybe a better position versus Discover in terms of brand share and mind share with consumers. On the other hand, you've got a lot of opportunity for card growth, not as much in the U.S., but internationally for sure. And I think the lower brand share and market share for Discover gives it a lot more opportunity. Got very strong returns on equity here, and not as high of a price that you have to pay for, say, American Express.
What's that figure, return on equity?
Over the past 12 months, I've got 26%.
Pretty
And
good.
to be fair, I think some of that is driven. I haven't dug into it yet, but provisions are very low. They may be releasing some reserves and lowering those provisions a little bit more than you see going forward.
All right.
So, I do not have an insurance company yet, which is surprising because I do love insurance companies. And I'm going to go with Progressive Corp.
Okay.
So, primarily a car insurer, a little bit on the expensive side, over 2 times book. But what I love is there's a huge opportunity for them to grow. I think the agent model of selling car insurance is going to, over time, cede to the direct model, which is Geico, of course, part of Berkshire, but also to Progressive. And Progressive is also a really innovative company. And one example of that is, I don't know if you guys are familiar with the Snapshot program,
Oh, yeah.
but basically it's a usage-based insurance program. You plug basically a device into your car. It sort of tracks your driving, and they're able to improve both the profitability of customers who use it, but also offer lower prices. And I love a company like that can grow and is innovative, and I think it's just a great company.
It's a good call. I like it. So, recapping 4th round now, we've got Billy with eBay going outside of finance, sort of, but got that PayPal, that nice PayPal
Snuck it in.
angle. David went with PNC Financial, that's PNC. I went with Discover, that's DFS. And finally, Brendan, it's PGR, right?
Yep,
Progressive.
PGR.
PGR. Heading on to the 5th round.
All right, so kind of playing off the electronic payment angle, I'm going to go with MasterCard here.
Okay.
I think your pick of Discover was a good pick. They're kind of a little bit under the radar and they have room to grow, but I think MasterCard is probably one of the best operators in this space. They've consistently been able to execute. They have a huge network. They're second behind Visa, but they're still doing very well, capturing a lot of global market share, focusing a lot on Asia, focusing a lot on international, very incrementally profitable. I really like MasterCard.
Great.
Yep.
All right, I still need to fill my REIT space here, and this pick may not come as a surprise to
Yeah,
Matt.
it doesn't come as a surprise at all.
I could have gotten it later. It was just sitting there. I need to take him off the board. Going with Annaly Capital Management.
Okay.
A mortgage REIT here, primarily invested in agency mortgage-backed securities. So these are mortgage-backed securities that are guaranteed by Fannie Mae, Freddie Mac, the majority of them. They are putting in some commercial real estate investments into their portfolio, not a significant part. This is one of the oldest mortgage REITs in the business. It's been through a lot of cycles. We're going through one of those cycles right now with interest rates potentially rising, hurting the book value there. I think they have the management team to get through it. I'm picking up Annaly here.
Alrighty. So I'm being told by our producer that we're going to have to cap this at 5 rounds. So Billy, you don't get the advantage of that
Ouch.
foresight neither did you, David. Brendan, you can start thinking about what you'd like your final pick to be. That makes things interesting for me here. So right now I've got insurer, bank, consumer finance, and real estate. So I can go
Flexible.
any direction I want. Still got a lot of insurers on my list here. I've got a couple of banks I still like. I'm going to go insurance, and I'm going to go Aflac. I don't know how much to really say about this one. It's a very well run company. They produce outstanding returns on equity, and let's take a quick look here at what the
So like 24%
24%
return on equity.
and the price to book, I think, is still pretty reasonable considering that. Yeah, what
Little
about
over 2.
a little over 2 times book, which I think you're getting plenty of value there for the kind of returns that you're getting. So I'm gonna cap my little portfolio with Aflac. Brendan?
Okay. So I don't have a REIT, so I got to pick a REIT. It was my plan all along to pick a REIT last, sort of like I always pick a kicker last. So I'm going to go with HCP. It's one of the largest, most diversified REITs in the country that's focused exclusively on healthcare.
Okay.
And I really like this because I think sort of healthcare spending is going to grow as our population ages, and it's not something that's totally subject to economic cycles. If people are sick, they're going to spend money on healthcare, and it's going to grow. And with having a diversified portfolio across different types of sort of healthcare real estate, whether it's hospitals or nursing homes, they have a good mix. I think that it'll be a steady grower over the long term, and the yield right now is over 5%, so you're getting paid every year.
Cool. So reviewing our 5th and final round, we had Billy going with MasterCard, David, not surprisingly, Annaly Capital. I went with Aflac, that's AFL, and finally Brendan with its healthcare REIT, right?
Yeah, HCP.
Healthcare REIT, HCP. And folks, that'll do it for today. I will be out tomorrow, but David Hanson will be here, and you can tune in then on Where the Money Is.